Hey, Darren Garman here, and I want to talk to you about an opportunity you want to keep on your radar. This is something that has not been seen now for going on 20 years. And we've only seen this kind of opportunity 3 times over the last 50 years. We saw it back in the early 80s. We saw it in 2008 through 2011. And this will be the third cycle, the third iteration of the opportunity that I'm going to be talking to you about. And it has to do with multifamily real estate and how investors, if they know what they're doing, are going to not only get a great return on their money, but in many cases, they're going to be very rich as a result. First of all, multifamily owners in general are in big trouble. I and other owners like me are in the vast minority right now. The majority are in big trouble. Now, I just referred to a couple times historically over the last 50 years where we've seen multifamily owners in big trouble. The first is the S&L crisis. I don't know if you remember, there used to be lending institutions called savings and loans. Well, back in the 70s and early 80s, there was a lot of overborrowing, overextending, and a lot of, let's just say, things done under the table. And many multifamily values plummeted 50, 60, some cases 80%. And multifamily owners had to sell their properties for pennies on the dollar, or in many cases, they were taken back by lending institutions. And it was a time where you could get unbelievable discounts in purchasing multifamily property. There was a company created by the government called the Resolution Trust Corporation. Their whole purpose was to put all of these properties, aggregate them together, and get them sold for pennies on the dollar. Now, that was in the early 80s. Then you go to 2007 through 2011. Again, the real estate crash, the real estate financial crisis. At that point in time, many multifamily owners ended up selling their properties for pennies on the dollar, and investors like you and I were able to pick these properties up for unbelievable discounts. And the third cycle is here right now. And that cycle has to do with, as I mentioned before, multifamily owners right now being in big trouble. So Darren, why are they in big trouble now? There's 4 main reasons why multifamily owners are in trouble right now, and we will be able to purchase their properties in the near future for pennies on the dollar. Here we go. Number 1, property tax increases in the last 3 to 4 years. You may or may not be aware, from 2019 through 2023, that represented one of the largest multifamily acquisition periods in history. Record prices were being paid for multifamily properties from 2019 through 2023. And in some cases, records were broken in multiple states of how much people, investors, institutions were paying for multifamily properties. Well, when you pay high prices for properties, what then happens to your property taxes? That's right, they go up. And they go up to the prices that you paid. So right away, when you buy a multifamily property and you pay a record price for it, your property taxes are also going to hit a record property tax level. I mean, that makes sense. That's logical, right? So that's number 1. It's number 2. Property casualty insurance is one of those things that came out of nowhere. This has totally blindsided every multifamily owner, including me. So what's happened? What's going on with property casualty insurance, Darren? I'll just put it to you this way. Premiums over the last 3 to 4 years have gone up over 100%. I want you to think about this. So let's say your homeowner's insurance or other insurance going up 100% in 1 year, another 40% the next year. And the next year, you can't even find anyone to cover you because multifamily property is too big of a risk. And when it's deemed too big of a risk by enough insurers, what does that do to the premiums again? They go up again. I have never in over 30 years seen this high of insurance premium and the premiums raise as quickly as they have over the last 3 years. This has blindsided everybody, guys. This has blindsided everybody. All right. So you got property casualty insurance premiums. Then number 3, inflation. You've been impacted by inflation, whether you're a business owner or not. You've been impacted by inflation. Let me give you, got an invoice here with one of our properties. Let me just give you a microscopic look at what's going on with inflation. And I want you to think about owning 200, 300, 3,000 units, and this being the case. So follow me on this. This is a recent estimate that we've got for the replacement of an air conditioning unit. Pretty simple thing. Now, this is what's called a central air unit. You know, the big units that sit on the side of buildings or sometime on the roof of buildings. We need to replace some of these. Some of our units are getting older, so they're going to need to be replaced. 2 years ago, just 2 years ago, to replace this would cost us roughly $2,700. So the best you could get was around $2,700. You want to know what it is today? $6,200 in 2 years. Now, guys, that's just one thing. Now, think about all of the other items, and I'll just call them things you need to operate a multifamily property efficiently and effectively. And think about what I just said. So number 3, inflation. And then number 4, interest rates. Over the last 2.5, 3 years, interest rates have doubled, which means multifamily owners' loan payments, for the most part, have doubled. Now, here's where it gets really interesting. Remember we talked about just a little bit ago, the big buying spree from 2019 to 2023, record prices being paid, unbelievable amounts of multifamily trading and selling. Many of those properties were purchased not with 80% financing, not with a 90% loan. Many of them were purchased with 100% financing. And how that typically worked is an investor or an investment group would get primary financing from like maybe a bank or maybe like an agency loan, like through Fannie Mae or somebody like that. And then they would borrow the down payment too. So they would be in with 100% financing. Guys, think about this. Think about being in a property with 100% financing, hell, even 80% financing, and your interest rates doubling in 2.5 years. Think about that. Now, let me conclude by telling you this. You probably have already surmised where all this is going. This is the storm of the 4 horsemen. I use that biblical context, but it is true for many multifamily owners right now. The 4 horsemen are on their doorstep. High interest rates. We've talked about that. They are unbelievable insurance premiums and increases. They are inflation, and they are record property tax rates. Multifamily owners are calling me saying, Darren, will you buy my property? Darren, will you look at my property? And guys, this is just starting. This is opportunity. As a result of this, as a result of seeing this, as a result of knowing what I know, I've created the Heartland Opportunity Fund. This, again, will be one of the biggest opportunities we've seen in real estate investing in the last 50 years. But guys, right now, I don't have everything ready. However, if this is something that after watching this, listening to me, you think this is something you want to know about, you want to be one of the first people, one of the first investors to get information, to get the information from me in terms of here's what we're doing with this, here's where we're going, here's our direction, and here's how you can benefit. If that's something you want to be involved in, just simply click on the link or fill in the information that I have here. Once we get your information, I'll make sure that you obtain the information that we're putting together so you can make a decision. And that decision, again, simply comes down to this. Do you want a good return, or possibly do you want to get rich? If you want to get the information, want to be the first to do it, click on the link, complete the information, and we'll make sure that you're one of the first to find out if this is something that you ultimately should be getting involved in. All right. Well, take care. We'll see you. All right.